Hey all, welcome to another video of ChartsMaze. So today is 22nd Jan 2025 and the markets are not so doing good. So we thought we will use this downtime to help educate our audience. And what other best topic to have than going back and study the past winners. So today to explain that we have Neil who goes by Day and Trader Twitter handle. We will share the link in the description below. And so he has been trading in market for the past decade and he's one of the veterans. You can see his tweets and understand the depth of his knowledge. So we have Neil today here. So Neil, over to you, please.
Okay, thank you, Mother, for inviting me. Um, so what we'll do is we'll keep the conversation most probably in English, and I'll
Sure.
keep going a little more English, I would say, because so that everyone understands.
Hmm.
Um, as you can see, the topic for the day, it's more of critical thinking or from a winner analysis point of view. We have done a lot of work on situational awareness or positional progressive exposure, whether it's positional trading or swing trading. I wanted to take one of these approaches now, which is winner analysis, and dive a little deeper and spend more time doing this. So I think the viewer gets a more deeper understanding of how exactly a winner is supposed to be analyzed, or at least how I do it, more than anything else. So let's start off. We'll go towards something other than equity also, but it's more about winner analysis in the equity markets.
Yes, excited for this. Let's get it started.
Yes. So the first question is what makes a winner? So I split these three things into three parts. One is the run itself, meaning the percentage return that the winner gave, the theme that it was from, and the catalyst that was part of the winner and why it ran so much. The second is the smoothness of the run. So the run could be, for example, a stock can run 500%. But if it has kept going under the 200 EMA again and again, it's falling 20-30%, it's rising 20-30%. Another time it falls 50%. Then this smoothness is not there, and that's why it will keep throwing you out, or else it will make it very difficult for you to do any kind of risk management because you will see your gains rise up and then fall again and again, which will it'll really bug you. um, it's not a good place to be, basically. And the other part of the smoothness is also that when the run is not smooth, it is rough. You don't know whether this is just one other gyration in the stock, or it is actually going to keep going down now. So if it gyrates towards the downside and then it keeps going down, then you have actually lost all of that. Whereas when the run is smooth, as soon as the smooth part of the run is over, you know, okay, this is the end, and I don't need to give up too much from the top. Maybe you will give 8, 10, 20, 8, 10, 15% from the top, but after that you will cut your losses, or you will at least save your profits, I would say. And then the third thing is the time, which is, let's say the stock did run 500%, 400%, but if it took 50 years for it to do it, then there's no point, right? Because we'll all be in the grave by then. So these are the three things: the run itself, how much it ran, how smoothly it ran, and how fast or slowly it did it. So I see this as a funny idea that I just had the other day, that every winner is an onion. So let's start peeling it. And the first example that I'm going to take for this is Indian hotels.
Hope our
You
eyes
can,
don't burn.
so yeah,
But yeah,
if
an
you will,
expert is doing it. So
if you will trade the Indian markets or any markets, then you know there's a lot of crying that is done without onions also. And definitely a good addition to this analogy that a winner does make you cry on the way up. Um,
yeah.
so the Indian hotels is the example we are using. You can use this same blueprint to do a winner analysis on others, but I'm trying to view this more deeply, so that you can see one, and then you have a thread to pull. Basically, I'm giving you the thread today. So let's see Indian hotels on, say, a weekly chart. Okay, now as you can see, Indian Hotels was building a very, very large base up until August 2020, so August or September 2021. This is the part where things started getting very interesting. If you will see this same thing on the daily chart, you will realize something even more interesting. that this stock during the COVID fall had obviously it had tanked with every other stock. Then it started gaining ground a little bit. And instead of here, if you see that this is the 200 MA, the blue line, which is a little faint. Obviously, I don't use MAs that much, but it was taking resistance from there. Finally, it broke out of that 200 day, and it again fell. This time also it did undercut, but it gained back ground. So all of this part is actually the prior run of the stock that you kind of need, and the greats talk about this a lot, that the stock has to have a prior run. A person who must be looking at Indian hotels from the bottom might by this stage or this stage feel this stock has run up 130 to 160%. So this is the point where a conventional retail investor or trader thinks that, oh, this has already run up so much, then how much more will it run up? And you can see that after the 150% run up, this stock really puts conventional thinking to place. It has currently run up 400%. By around the top, it was 470%. That's what, at least in hindsight, we know this was a great winner, right? So this is what we are going to be analyzing. So the first part of the run is the chart itself, which we are already seeing, which is in front of us. Whether you see a daily or a weekly, it doesn't matter that much. But what you need to see is how the chart talks to you, or how the price talks to you. This was, by the way, this was even a longer base if you take this part, but it doesn't matter. As long as the base is long enough, meaning at least more than 2 to 4 months, and ideally more than 6 months or 2 years, it is a time when the stock has been sleeping for a very long time and it's trying to make a move. So if you just see the chart, it's super simple, right? You just say, you start putting pointers. We should have bought here. 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 Nowhere it's undercutting the 200 MA. In some parts, it's cutting the 50 MA. This is very easy, right? The chart itself. So when you are analyzing winners, this is the conventional approach, that you just start putting all of these pointers and say, I would have bought here, I would have bought here. Next time this happens, I'm going to do this. This is just one layer of the analysis, actually, which is the chart itself.
Yeah, so just a small thing that we want to that we'll try adding. So what is it that is special about this chart? So 2021 May, there are many charts that have rallied.
Yes.
So what is special about this chart compared to other charts? Maybe if you can show by some comparison compared to other winners, or maybe other stocks that have not so performed well, then people can appreciate what it actually is doing during this time.
So one of the first things that it will pop out, actually, because at this point in the analysis, we are looking at an established winner. So we are not looking at what was there in 2021 that was amazing in other charts or not amazing in other charts. Right now, we are trying to see, if you already know that the stock is an established winner, how do you reverse engineer that to coming back to what can be actually used today? So I will be ending with that, actually. So I will be ending with a chart that maybe say looks like this right now, and is more primed to beginner run.
Okay.
Does that make sense?
Yes.
So because when you are this I would use the analogy of say cricket or anything else that you might be a fan of, that when you want to become a very good batsman, you don't look at videos of your college superstar or some Ranji player or something like that. You look whose videos do you study? You study Virat Kohli's videos or Dhoni's videos. If you want to become a bowler, you study Bumrah's videos, right? So we have to see an established winner and then say, okay, what was Bumrah doing back in the day? What was Virat Kohli doing back in the day? What was Dhoni doing back in the day? Right?
Makes sense, yeah.
Yeah. So now we have to see what was Indian Hotels doing back in the day. So the chart part of the run is very simple, like I said, to analyze, that you pick very good points on the weekly chart or on the daily chart, where low risk points where the stock has really come back to meet its 50 MA. And if you will see, I will shut the 200 now, and I will keep it to the 50 MA, and it will become clearer. So, and obviously when you see these portions of the chart here where you think it is really undercutting the 50 and going down, these are all exit points, actually. And you have to, as as part of the riding the winner, you have to re-enter these names in these areas, and that's the only way to actually do this, because when this stock tumbles from here, you have no idea whether this will recover or no. So it is better to just cut your losses, or basically cut your profit at this kind of a level, whether it's maybe this point in December 2022, or some other point where it has really undercut, like over here, when it undercuts the price. So from the chart,
So is
from
there
the chart itself, yeah.
any maximum number of undercuts that we can say that, hey, this is not smooth?
So that is something I will come to on the next slide now. That first of all, where to enter, because what happens here is when this stock made a new high, now it is very easy to say that you would say, why not enter here? Why not enter here? Why not enter here? Why here? Okay. Or why not here or here also? That is also a very interesting point, and I will be showcasing you how this point was even a better entry in India Hotels. Or I would
Sure,
say
sure.
a point where you would have been able to double, triple, or quadruple your position without worrying about risk. And I will be displaying that right now. Because the other part, the other layer of this onion, which is the fundamentals. Now,
Okay.
any stock that runs up 400, 500% does not do it on a whim. It does not do it on a rumor. It might run up 40, 50%, or even double based on some kind of a news or a rumor, but it does not do a 400, 500% run without any reason at all. The problem is that those reasons are sometimes not visible to us as retail investors, or we are not insiders of the company. We have no idea what's happening, actually, to be honest with you. So what can we decode? The only thing that is in front of us, that is good results. And when I say good results, I mean to keep it as simple as possible, meaning till September 2021, you see, this was a loss-making company. And even before that, if you see, the results were very shifty. They were not very great. But at least in September 21, it gave a 48% rise and a 184% rise in sales, 48% year-on-year rise in EPS. After this December 2021, it became profitable. And since then, it has been profitable. But obviously, for us, December 2021 results were the only results visible when we were here. December 2021 was this part. These were the results that were visible. Before this point, you would have been a technical trader in this stock, because fundamentally there wasn't much to look at. You can see that September 2021 results, which would have come out around here, August, September. So these were the results that had come out, and the stock had already moved during that time. So this is probably what insiders are trading, that they already know the results are going to be good, so they trade it up. This is not where you would have entered the stock. You would have already seen the stock when the December 2021 results came out, which were in Jan 2022, Jan-Feb 2022. So this is the point where the stock comes into your radar. Now, this is a more interesting point in this. This stock in Jan-Feb, it released good results, and see what it did. Let's go deeper. It gave good results here on 1st Feb, and then it tanked. Then it digested the results, it regained the MAs, and this was a very, very good day to kind of enter the stock post knowing that the results were nice. This was one of the first good entry points in the stock. And the stock lifts and it pulls back, it lifts and then it pulls back, undercuts this price point also and the 50 MA. This would have become an exit. As per the most prudent risk management rules, this stock would have been an exit. It gave you a run of say 23%, and then it gave everything back almost and ended up as a 6% return. This is part and parcel of trading a winner, because you cannot time this to perfection. The good results have come out. Another set of good results, by the way, have come out here. By April 2022, you can see these June results have come out. We are in April, so March results have come out. 175% gain, 42% gain. Okay, so these are already still very good results, and the stock has undercut. So you have to leave. Either you have sold into strength at this point, somewhere around here, and gained maybe half of your position or 30% of your position has been cut, but the rest of it gets cut. Anyways, you are out of the stock. Then another good result comes in April, like we said, and the stock starts stabilizing after the results. It falls a little, it stabilizes. Again, it creates like what you call a base, and it starts moving up from the base. This day, around here, this price was another entry point in the stock. If you will enter this stock here, exit here, and push this out of your watch list, you will never be able to catch this kind of a winner. So keeping it on, it's giving good results, right? So if it's giving good results, why is this happening is the question, which we'll come to in the next part of the journey. But as you can see, if you would have taken this entry, you could have pyramided a little more here when the stock gave a bigger breakout. It ran up, it never pulled back to the 21 till this day, and it never closed under the 21 MA. This is called a smooth run.
I think there was a one more quarter result at June 2022, which has been announced around July.
Yes. So the June 2022 result was again triple digit earnings, triple digit sales. Then this pattern is, as you can see, continuing. So it's kind of going to be redundant to keep coming back to this, but very high double digit sales and very high triple digit profits. In fact, they kind of started booming. If you see 163, 175, 150, 180, 300, 300. So this was a time, March, December 22, March 23, when the stock became even more interesting, I would say. If it was not on your radar till here, at least till here, it should have come. Now, this part is very interesting, that whether you took entry on any of these days, whether it was this day, all of these are nice entry points. This stock gave roughly a smooth run of around, even if you count the end of the day here, it was 36%, or this undercut here, which was around 39-40%. And on the top, it had given around 48%. So this obviously warrants you to book some of your gains into strength. Okay. When this smooth run
Just a
ends
small
here,
query.
yeah.
In this 35% rally, as you can see, the volumes are very pretty low.
So this is a trick of the eye. You see this volume in December, which hasn't even come yet. That is what is fooling you actually.
Okay, can we go
When
back?
you will see this
Yes,
part, because this is what you see
yes,
when you're entering, right? You will be able
yeah,
to see some days here, which was the 5th July. Why do you think I marked this day? Why do you think I marked this day? Because 5th July and 7th July was when it got above average
yeah.
volume.
It went slightly above, but not as powerful breakout as like you see
No,
in BSE charts.
correct. So that is what defines, right? Different. When you will be sitting at the end of 5th July, you will be looking at many other names, and that's something that's also something I will be coming at, as to how to
Okay.
differentiate and say how to come closer to these winners, and how to do that as well. So as you can see, the volume is increasing. So I use 50 MA as a filter here. So anything above 50 MA becomes interesting as a volume day. 20th July, as you can see, was above average, but the closing was not great. It was a little further away from the 10 MA. This day, 25th July, becomes more interesting for me. So it's very, like I said, in hindsight, it is very easy to draw a line and say I would have entered here. If you are a very prudent risk manager, you will have entered somewhere at 256. People like me are very okay giving it 4 rupees extra. And then, like I said, this is very crucial, that this part of the smooth run ended either on this day or this day. It has not cut the 50. That's what you need to realize. So you don't need to sell everything. This is more like a dance. If you bought here, I would say at 30%, 40% return, somewhere around this stage, you can book some into strength, which will give you some comfort saying that I made some money. After this stage here, it starts gyrating. So you have to now, because you've booked some into strength, you can bear with these gyrations. But as far as I am concerned, I would have drawn a line here, and that line would have been met, I think, on this day or this day, so many days. As you can see, this stock here, it had made a high. This high was also almost not touched, and it fell after maybe say a bad set of results, or not something as good as what the market was anticipating. So in November, we can see November 2022, we can see that September 22 results would have come out, and these were amazing. But this is what the price tells you, that maybe this is not the time. And as I told you before, I will show you how 336 was actually the best time to enter the stock and not all this time before that. If you were tracking it based on good results and only the chart and only the chart's fundamentals, then you would have been able to make some money here, make a very good decent amount of money here. But this run has still not started. And why it has not started is what we will come to next. The third layer of the onion is the market. What we will do now is we will move to the weekly chart of Indian hotels. You can do this, like I said, with any other winner. I will be adding, I have a two screen setup, so I usually do it side by side on two screens. But for the sake of convenience, we will be splitting this chart now. And seeing these are crosshairs, okay? So you will be able to see this very easily. When I put my cursor here at this long base breakout on Indian hotels, you will be able to see where the broader market was. I'm using the mid cap and small cap space as the broader market. Almost any chart is going to be fine. If you will see the CNX 500 or if this stock belongs to the mid caps index, you can choose that. For me, the small and mid becomes like a nice encapsulation of everything in the market, which I track usually, which is all the mid and small cap stocks and not any of the large cap stocks. So you can see as soon as this stock does not know that the market is going to get weak, right? So this stock started its run in September. But as soon as it started its run, by October, we saw what happened on the market side of things. In October, the market topped. And now, as I move down on the market here, you see how this stock performed on the left. As the market gave a small swing down, the stock moved down with it. The market moved up, the stock moved up with it. Market made another leg down and made a lower low, but the stock made a higher low. Market moved up, stock made a higher high. Market has made a lower high. Market made a lower low, stock made a higher low. Market put in a new high or at least closer to the previous highs and higher than this high. The stock shot up like crazy at this stage. Then
Beautiful,
the
beautiful.
market went down a little bit. Stock also went down a little bit. Market went up, stock went up. Market pulled down badly because it kind of broke all these lows, right? So market pulled down. Stock did not pull down as much. It never broke its previous low. Finally, the market moved up here, and the market here on this day, which was April 24th, I would say that week of last week of April, first week of May, second week of May, all of these days or weeks were when the market started making a very consistent move. The move had started here actually, but we don't know that, right? We don't know that the market is the bottom. We know, we can tell somewhere around here, because if you go deeper into this chart, then you will be able to see. And obviously, like I've done some breadth analysis before, you will be able to see that the breadth gave a very nice breakout here actually during this stage. And this stage was where the stock also made a fresh high. Market has not made a fresh high, remember that. And the stock has made a fresh high. And from here, the market rallies and the stock rallies. And this is the reason why I said that this 330 point was one of the best times to enter the stock. Or if you've already entered the stock or you have taken some pilot positions, this is the time to take a full position, because now with the chart is with you, the fundamentals are with you, and the market is with you. Now you can go back to almost any winner, and they will almost work like a photocopy of this chart and in sync with the market. Maybe if the winner is even stronger, it will make higher lows when the market is making lower lows. If the winner is an average winner, it will go down with the market and make a lower low, but it will make a fresh high during this time. As you can see, Indian hotels made a fresh high during this stage. There were some other stocks which were making fresh highs during this stage when the entire market was also breaking out. And we will see examples of that. But after this point, as you can see, again, just so that we can continue the analogy, the market shot up, the stock shot up, as you can see on the left. The market pulled very badly down in October 2023. If I'm sure everyone who was trading actively remembers this, and see how the stock had pulled back down also. So now this is the point where it gets very interesting. If you have entered the stock around this stage and you see the market has rallied and now is giving a pullback, and this was an ugly one, trust me, I am not kidding when I say this was something that threw a lot of people out, and I am a person who feels that I don't mind getting thrown out here actually when this undercut happens of this level, I would say. Because what has happened, the stock has moved up, it has made a very nice base and moved up again, then it made a new low, swing low, tried to move up, but without making a fresh high, the stock fell. So here is a point where I like to step away from the market and the name, and here is a point where I like to get back in if I can. If I'm willing, if I have the cash, and if I have my eyes on the stock, if it has already been a winner for me, as you can see that it has already given me, say, 25-30% return between that time, then I know it has something in it. And like I said, this is just one example of a stock that has moved a lot. You can keep doing this and it will keep showing up as the exact same thing. Then as you can see, the stock moved up. I'm going to try and delete some of these things. Stock moves down with the market, as we were discussing. Stock moves up. Look at here, stock. The market moves again. This was an area where the market had become very choppy. The market chopped down and made a very bad low. The stock just pulled back till the 50 MA. This is the 50-day MA, by the way. I know we are on a weekly chart, but I keep my MAs 2 days only, just so that there is a little sink in what I'm seeing. The market moved up. The stock moved up. The market made, as everyone remembers, during the election day, there was a very bad spike. The stock will replicate it. Then the market moved up. Stock moves up. Market made a top. Market pulled down. Stock did not pull down that much. Another strong strength of the stock. Market pulled back up this time. Stock kept moving up because it never pulled back, only in this case. And then without making a new high, the market made a new low here. And now the stock has finally started cracking. So now you are seeing we are in sync with the stocks chart. We are in sync with the fundamentals of the stock, and we are in sync. And these fundamentals have continued. So I'll go back to this, and you can see that although the rate of increase here and here has decreased, but if you see some other parts in between, because see, when we are entering the stock, we need a lot of reasons. At least I do. I need the stock to be a good stock, a good fundamentally driven stock, a stock that is in a good theme, which we'll come to. And the chart has to be good. It has to be making fresh highs. Volumes have to be good. The ends of those days when I'm buying the stock has to be good. The ROE of the stock has to be good. But when the stock gives you a reversal, which is what has happened somewhere around this day. Now, at this point, I do not wait for the stock to give me a fundamentally driven reason to leave, because we all know when the market starts cracking, it does not care about this. And we saw that in the beginning also, right? Didn't we see that here when the poor stock was trying to start its run, it was pulled back down again and again by the choppy market or the falling market.
Yeah, so whenever the stock was breaking the key moving averages, it was because market was cracking down.
Yes.
Whenever it was
Yes.
showing its strength, because it is able to show its strength.
Yeah. So no matter what part of the run you are in, whether you're in the beginning of the run, you're in the middle of the run, or the end of the run, the price is the main determinant actually. So when everything is here, all this time, didn't we realize that when we were here at Indian Hotels, the fundamentals are already in place here, and the fundamentals kept getting better and better as the stock moved up. But why did all this happen? Why did this very bad pullback happen? Why did this bad pullback happen? And why did those pullbacks not happen later? Because it's not that the stock hasn't pulled back. It pulled back here also, it pulled back here. All of those times the market was cracking and the stock pulled back. All of those times is a good time to either exit majority of the stock. So if you're someone like me, or someone who's a very prudent trader, you would remove majority of the position. So you can book out 80-90% of the position and only keep 10% of it just to see, because so that the stock remains in front of you. And I am doing that currently also in this falling market also, and I will showcase that. So now we are clear with the fundamental part, the chart part, and the market part. Now, so let's see some other winners, but we will do a more quicker analysis because I don't want to go so deep into it.
Just one small question. So how did the
Yeah.
other hotel stocks perform during this period?
So
Was there a theme or is it just the Indian hotel? We'll just
so
explain that.
you can check I don't know from the top of my head for sure, but we can check other hotel stocks actually. Uh,
Lemon Tree.
so yeah, Lemon Tree has been giving buy signals from here, but we'll have to see the fundamentals of Lemon Tree were okay. Yeah, they were not that great till March 2020 through. From June 2022, they have become much better. And you will see from June 22, July 22. This is the area where it started giving good results. I have been tracking Lemon Tree since these highs were made. But as you can see, Lemon Tree never gave a fresh all-time high till this stage, or even a 52-week high till this stage. And you will see the same thing. See, this at least this was a very nice breakout. This looks like a nice base here, decent enough. Stock makes a move up. Same thing. The hotel stock started moving in September, October. They all tried to move up. All of them were pushed down. So this will be a better application because you're picking something from the same industry. If the entire hotel industry started picking up in September or October, which you would have seen in the live chart, right? Because you would have seen a Lemon Tree also like this, that it is coming out of a very big base. Right? So if you were seeing this, you would have seen, okay, Lemon Tree also went out. Again, Lemon Tree was pulled back down. Now see, the same sink is there. Lemon Tree is making new highs, market is making new lows. Lemon Tree is pulling back, making market is pulling back, making very fresh lows. This guy is making new higher lows.
So is it safe to say that hotels as an industry has outperformed the indices, broader indices during that time?
100%, because actually, if you think about it, even a half decent industry will be able to beat the index very easily. Actually, that's the reason we are not just looking for an industry that is beating the index. We are looking for an industry or a sector that is beating the index black and blue, actually, which is again something I'll come to. Now, as you can see, what I was showing you, the next winner was say BSC. Now let's sync BSC with the market. Okay, I'm going to again try and hide all drawings. Or maybe I think I should delete them actually. Okay, let's see what happens. From entire 2022, the market was going down. 2022, this was the market being choppy. BSC was going down constantly. I have made a few tweets on this. Sorry about that. Got sticky situation here. Okay. Sorry about that. When the downtrend ends, this is the point where I just set this kind of an alert on the stock. This was a very aggressive day, by the way, April 23rd, 2023. But this is just a downtrend ending, and you can say that it was on the weekly chart, it was a very good breakout because it made a nice inverse head and shoulders on BSC. Then BSC ran like crazy after this point. I don't know why this is not. So as we can see, BSC ended its bad run here, what happened in April 2023? The market was coming out on the right, as you can see, from a nice base, and so was BSC. Now, if you continue tracking BSC, BSC was a buy from 500 actually, because as you can see, BSC was also giving good results in March. These results came out in, I would say, April, so the good results were not out till March. Or March results were not out here. This was the point where, for me, BSC became a buy because the results were out, and a lot of us at least in our circles, were buying BSC. All the professional traders were in this. But now the question is that March results came out, they were decent. Anything about 20% for me is a decent result. Valuations were kind of not bad. The ROE was also pretty good. And then BSC started giving explosive results. I'm going to shut this so we can see the chart more clearly. You will see the sink again. But you see now this stock is even stronger. We'll go on the market. The market broke out here. BSC, as you can see, broke out during the lower base of the market, not this base. So this is another sign of a strong stock, that the market is still not made a fresh high, but the stock is breaking out. In this case, though, BSC had not made a fresh high till this stage, which was August 2023. The market rallied, BSC rallied with it, and see here, the market fell like a lot, but BSC barely pulled back to the 21. In the previous case in Indian Hotels had undercut the 50 also. But BSC did not do that. This is how, if you are holding, let's say, both these stocks, you will know this one is stronger. If you're not holding either of them, you see this happening. You see Indian Hotels and BSC, you pick BSC. If you have money for only one.
So pro tip, the one that is not breaking the moving average is better winner out of those of two.
Absolutely. This keeps happening, by the way. Like I said, it will have an effect. It won't be like the stock is just moving up only. Even this one, if you see this over here, it looks small, but if you see the high that BSC made to the low, this fell 20%. This is the trick of the eye actually that messes with you when you're doing winner analysis. You think, oh, this was nothing, but imagine if you were holding this stock from here, you would be sitting at a 142% rise. And by the end of that pullback, your 142 would have become 95%. Can you live with this? I can't, at least. Very difficult to take this. But there is only one rule, which Kolamagi keeps saying and ranting in his videos. You are not smarter than the 10 and the 21. This is the only rule, one of the only rules that he has. You are not smarter than the 21. And in this case, you can clearly see the 21 was not broken, even on a weekly scale. On a daily, it is even more clearly visible that the 21 was not broken. But as I said, this is a weekly chart, but my MAs are on days. So the blue line is 21, the yellow line is 10 day, and this is the 50. So yeah, and then the market here, see, market finished its correction here. By the time the market finished the correction, this stock had moved here. See where the stock is. So the market then continued to rally. So the stock continued to rally. And here somewhere the market topped. By that time, this stock had started making a new base. Now see what happens. The new base was taken out because obviously the market, how much has this stock run? Can you imagine? This stock from either this point, if you are that prudent a trader, for me, the results came out here. So I'm more of a buyer at 590 or 600. This stock has run up 330% or 340%. Do you think it will keep running like a crazy person? It did undercut the 50 here. This becomes either a complete exit point for me, or it becomes a point where I book most of my profits and then keep some just to see what is happening if it's building a new base or something. In this case, however, I had sold everything that I had. I never bought BSC after this also because of cash management issues or whatever. But you can see clearly it built a new base. It moved up. But by April, what had happened is that the market had become very choppy. So from here, if I move to the market, you will see the market became choppy. It went down, up, down again, then up again. It became very choppy here. This was a very, very choppy phase of the first half of 2024. This entire thing. So you can imagine this is 6 months of us waiting. This is 6 months of the stock wasting time. So that is the reason I love, and I really love exiting a stock here when this undercut happens, because it has already given me a very good run. There might be other winners in the stock market that are running during this time. So yeah, continuing what we were talking about, then the stock tries to makes another nice base here, and it comes out of that base. All of these days, this was the actual base that it broke out. So you had to maybe keep your this thing here. This is a weekly time frame, remember. So there are days when the stock has moved up here, all of these days, and it has given you many entry points which are low risk entry points. Again, the stock moved up with the market. You can see I will put my cursor on the market so you come to know. These 3 weeks when the stock was moving up, the market was moving up. The market then moved down. The stock did not pull back a lot. It kept making a new base. As you can see here, this was a new base that was being built. And when the market, after being say oversold or whatever in the short run, it pulled back up, the stock pulled back up, and now the market has pulled down, the stock has pulled down, and it has put in another new high. So this is one of the more stronger names. And if you remember now what we just discussed about Indian Hotels, which is a stock that went 4x, 5x in the time frame that we were discussing, in the same time frame, BSE has gone up 1100, 1200%. So this has outperformed the 4x runner by 3x. You see that there's a very big difference. Why? Because the theme of the hotel theme was not as strong as the broker slash wealth management slash I would say all of these financials basically was a much stronger theme during this time. And we will also see how to catch those better themes. Defense obviously was a better theme, hence the other stock.
So one quick question in BSC chart also.
Yes, I'll go back to it.
So
I'm just gonna shut this. I hope I've sold you on this part of the journey that the stock is always in sync with the market.
yes,
But it
that is pretty
will
clear.
keep performing better than the broader market does in general. We saw that with Indian Hotels also, and we saw that with BSC also, and you will keep seeing that. Yeah, this is an open challenge. You can go ahead and see any big winner. It will do that, and this is how you can train your eyes for winners. Actually, Madhav, before you continue your point, that when you keep seeing this in a winner, now that it doesn't undercut this MA or that MA, or it keeps making newer higher lows or higher highs, then this keeps training you. So whenever any stock makes a lower high, you start questioning it, saying maybe this one is not a winner. Maybe this one is not the winner I was looking for. Yeah, sorry. What was your
I think that was beautifully put. I think many people, out of lack of patience, they expect it to straight go up in a V shape. But I think you have beautifully shown with side by side comparison that winners do retract, and sometimes whenever there is strength, they actually go and outperform the broader indices. I think I think that comparison. I think this is the best part of the video. I think many people would like it. And so yeah, going back to the BSC chart, I wanted to ask. So I think BSC at this point would have been a very low RS stock, probably, I don't know, maybe like 50, 60. By the time it would come to 70, 80, it would be very late. We don't know at what point it came. And second thing is, it is very low from its previous high. So I think most people would have found it at August or September types when it has actually came at the when it has actually come at the actually come to its previous high. So
this is interesting because first of all, I can assure you one thing: if a stock has 50 RS, it will never be on my radar. I do not look at a stock which has lesser than 70 RS. If you will start drawing these bases now here, you will keep seeing that BSC kept making new long base breakouts. These are all long base breakouts actually. They must, so this is a reversal point, and then this is a flat breakout, this is a flat breakout, this is a flat breakout. This one is a flat breakout right here. And then it finally does this. So these are all points where the stock becomes a new buy, actually, not just a pyramiding position. It's all, for me, these are new buy points. I do not mind doubling my position. On these ones, I wouldn't have, because maybe it would have moved very far away from some MAs. And here I wouldn't have doubled. I would have doubled here. Maybe if I could have found it here, because this is a weekly chart, right? So when you go down to the daily and you can actually test my system out, which is the day end system, you can see this was the end of the day. This was the end of the day here. Very, very clean above the mark. Then this one was end of the day, because as you can see, the stock rallied, then it pulled back. Again, stock rallies, pulls back, end of the day entry. Here it makes a base, and then here it gives another entry.
Got it. So I think you're
These days,
saying
if you will see, the
around.
stock has moved up 6%. This day, the stock has moved up 3%. So any of these days you will catch, and you will put the low of the day or the low of the swing. It doesn't matter so much. So if you see here, if you buy it here, the low of the day is, say, 3.8%. The low of the swing is 5.6%. So it totally depends on your risk management and how much of a longish term trader you are, because some of these entries a swing trader, a prudent swing trader will see, and they will get a heart attack saying this is crazy that you are entering here, because I would enter here on the open of the day. But for me, I'm sleeping. I have no idea what the close of the day will be. It could open here and fall like a rock. Like it say here it did open here and then it fell. Here it did, see, here also it looked like a very nice entry day, right? You would have a risk manager who was very
Yeah.
prudent would have bought it here, and then as soon as it would have squatted, he would have taken a very miniature loss and got out. So that part is very true. They are taking miniature losses. I am taking much bigger losses. But what happens is, for psychologically, when you buy it here, it pulls back down. Then you either you don't buy it or you buy it, but the volume is not there. It tires you out sometimes psychologically. For me, it is about avoiding all of these days and saying, getting up on this day saying volume was high, price was going up, I'm in. And
Cool,
my
cool.
stop
Yeah.
loss will be, let's say 4-5%, or if you want to go to the low of this, it is around 9%. But by this time, I have already started, buying the stock, accumulating it. Here, I'm not buying a fresh position. I'm doing a 1%, 2% kind of pyramid here, because I have bought, say, 5% here, 5% here, 5% here, or I have bought 10% here, 5% here, 2.5% here. It totally depends on your system here. Because the broader market, I can see the broader market has started moving in April. By May, June, July, you are all in. You are already very positive about the market. You can see the market has moved up for 2 months in a row. So these things are something you can't see on the chart, but your emotional memory will remember all this stuff if you live it. And when you are analyzing, this is the main reason we are talking today. When you're analyzing, you need to keep all of this context. That back test, that's the reason I kind of hate automated back tests, because automated backtests will not let you live through this the way you live. And you don't have to do 100 charts a day. Sit with one winner a day in your free time, after you've finished your office, you finished your scanning of the day, whatever. During this time, what are you scanning? The market is falling like a rock right now. So sit with one winner and analyze as much as you can that how the winner made its run. If you see, I will shut the 50 MA in this because it didn't bother it. Just see the run of this stock. It has never closed below the 21 EMA till it gave how many percent return? Here it closed finally under the 21. 364% return. No closes. Some cases it didn't even touch the 21. It touched here these 2 days only, September end days. And then it didn't touch here also. So it came and touched and closed somewhere around here. And isn't it amazing that the smooth run ends with the undercut of the 21? The 21 gets undercut for a lower high, and then the stock starts loitering around for God knows how much time.
Yes. Yes. I
And
think
in
journaling also helps in the recording the emotional roller coaster that you're going through while the stock is going up.
Yes, yes. So what we'll try and do is, I'm not going so deep into each and every one of these names now, because we've
Sure.
spent so much time. But HAL was a defense winner, strong theme. Ace Construction was a very big theme. Dixon Technology was a clear-cut winner. This is, in fact, a very interesting run because this had two runs. This stock, Dixon, was also a runner in the previous 2020, 2021 bull run. And this is another thing why you should not second guess a stock. So you see this stock, Dixon, was making a 52-week high here. You can go back and check on whatever platform you use. This stock was a very high RS stock. It was making a 52-week high. Earnings had come out in August 2019. Stock shot up because of the earnings. Then it digested the earnings, took out this whole thing. This is a weekly chart, remember? So this was a very, very amazing entry point. Even on a weekly scale, this stock was giving a 8% stop loss. So you can imagine if you would do on a daily scale, it would be a much lower stop loss. And the stock rallied here in this is the COVID fall. Can you imagine this stock's run? If you would have entered here and here, obviously it would have thrown you out, right? I don't think anybody was holding stocks in COVID. At least the ones who love their money weren't. This would have given you a very bad break here somewhere. And you would have still escaped with, I don't know what, 40, 50, 60% returns. And then during COVID, see what this stock did. It fell, obviously, it fell like a rock. This was a 30-40% correction. But it gained everything back. It made another base. And look at this. This is a weekly chart, see. You'll be able to see. On a 10% candle on the weekly chart. And then it gave a run. This was the COVID run of the stock. The smooth run maybe ended somewhere around here on the weekly time frame, 275% something. It tried to make another base, a flat base. What happened in October 2021, Madhav? Now we'll revise. The market started falling, right? So September again, like Indian Hotels did, like Lemon Tree did, all of the stocks who were going to be winners, they tried to go up, but the broader market pulled them down. So this stock then took more time. That's why when how much ever the good the story is, how much ever good the narrative is, when the price tells you this was a pan ultimate level to exit the stock because it made a new high. This became then it loitered around. It became broke down. It gave you nothing all of this time, all of these weeks. It gave you nothing. And then after that, from Jan 2022 to July 2023, it was basing here on a lower level. And it's amazing, right? How the runs start in May only. All the runs start in May and April. It's so funny, right? All the winners start running in May and why? Because they run with the market or a little before the market. This is a weekly time frame. So you can see here, you can see the above average volume was there in May. The market had already bottomed. The stock has made a higher low or whatever you want to call this, or a double bottom, or I don't care about these patterns. But this was a nice symmetrical this was a nice ascending triangle, you want to call it, and it broke out. Now, if you miss this part of the run, I'm totally fine with it personally. I don't care. This is a prior uptrend that I need in the stock. I don't mind entering the stock here actually, not even here. Look at the volumes you would have been able to see on all of these weeks before this run started. And then, like you saw, there was a 300% run there. Even if you would have waited for this 52-week high, this stock till it gave an exit here was another 260% run. So these stocks are all clear winners. There are many more clear winners. I would highly recommend you to use this also. There is in the more section of your website, you've put this past winners. So you can actually go back and see the 2020 winners. And Dixon is one of them, see. So you will find this in the list. You have to go back. It's not like it's a big treasure hunt. And you can see this. Then I come to the catalyst part. So I'm going to run through this also really quickly. Catalyst is again something that you already have the chart with you, you have fundamentals with you, but then at that time when the bull market is on, maybe many stocks are giving very good results. Then how do you pick which ones to go for? You have to pick for the theme and the industry that you are in. So like you saw already, hotels maybe were not doing as well as the financials. Maybe the financials were not doing as well as the defense and the railway stocks. So all of these different themes were working. Any good theme you will pick now, there are probably as far as groups go, there are 130 groups in the market. So you have to stick to the 20, 30, 40, 50 groups on the top actually. And almost any group you pick, you will be fine. If you have picked the best group, one of the best groups, then the worst stock in that group also will be very good. So your stock selection is forgiven if your industry and your group selection is good. As far as the catalyst goes, I just want to quickly run through this. This BSC was the catalyst in BSC was that they had launched a new product. Okay, this had come in. You can see this the news pieces from 15th May 2023 that they are relaunching the derivative segment. And obviously, as soon as derivatives were launched, it became a huge this thing. A little prior and older example that I wanted to use, because I didn't want to use everything from this bull run, was Jubilant Foods. Jubilant Foods had a new CEO come in during 2018 or something, 2018, 2019. Again, I'm sticking to the weekly chart so we can see it better. The stock, as you can see, was going down. It gave a higher low. So this is on the weekly chart. This is always going to be visible that it made a higher low. Then it shot up. So when it shoots up like this, it's very difficult to catch the name because it has given you no consolidation. But then at this area, you see, it gives you weeks of consolidation before it moves up. This was due to, at least as far as I know, a new management came in and changed the company. 130 to 118% move, I would say, as far as a smooth move is concerned. It might have thrown you out somewhere here, and you would have been able to re-enter here if you were still looking at it. Otherwise, also, like I said, if you enter here and you're thrown out somewhere here, you're still making 50%. I don't have any problems making 50% in a few weeks. And this stock has, after that, also done very well. But my example here is more related to the management. I think Pratik Pota was the guy who was hired during this time, who has, by the way, recently resigned. So maybe that's visible in the stock too. He resigned in 2022, by the way. So this is the 2022 chart. So I'm not saying that the stock is falling because he resigned. Maybe the new CEO is much better. But yeah, this stock recently made this new base, tried to move up, but see what the broader market does to what has the broader market done in October and November. You will keep seeing this pattern over and over. I don't care what stock you pick. As far as this part of the journey is concerned, every stock will show almost this kind of a journey. The weaker stock will fall more, the stronger one will fall less, but both of them will fall. All worst case scenario, best case scenario, they will flatten. HAL was a kind of a new regulation, I would say. It was more about the government suddenly waking up saying we want to spend a lot on defense. Trent, as everyone knows, the Zudio story and them going aggressive into the retail segment and whatever it is that they did. This is what Trent was showing even before the run, might I add. September 2021 results, way before the run of Trent started. And this is another beautiful part of this story, that the run is smoother when the market is with it. This is I have displayed this with Vector Foods also. I will try and do it here as well. September 2021. So the results come out somewhere around here, right? November. Yeah, this is the point the results came out. The amazing 229% EPS run, 100% sales up. This is happening here, by the way, or not here. So the stock is moving up. Feb 2021, the stock moved up, got pulled down. Here, as we all know, the market was weak during this time, this whole October too. So see the same thing. The winner is also sleeping. Here it tried to break out. I'll make this more visible for you. Did not work. Here again it made a small base, tried to move out, did not work to a great extent, again pulled back down. Why? Because the broader market was weak. What is the stock doing? See, 229%, 80%. Here March 22 was a little muted. We'll have to check these because sometimes this data is a little fudged or incorrect. June 22, 200%. Again, September was weak. December 2022, 20% run. March 2023 results come out in April, 1400% jump in EPS. Now, this is also a little fudgy, I would say, because March 22 here shows 0. I don't think it was 0. But whatever it is, if you will check the results, you will see that the results were very good. They don't have to be 1400% every time. But such a coincidence, March 2023 results come out in April. The market starts running in April. Again, the same thing. The RS of the stock, by the way. So this became an alert for me here. As you can see, the yellow marker actually was lucky enough to be in this name for a very long time. This stock became this whole breakout happened here for me, and I started tracking it because the RS of this stock was a little weak here. And as you can see, it was not making a new 52-week high also. Forget all-time high. All-time high, 52-week high, everything happened here. While the broader market was cracking, this was also cracking. It stabilized, moved up. And here is when the stock came in my actual radar that it is a high RS stock now from 70. And the stock's RS obviously never fell almost till here. Stock has again given gyrations. Look at this, October end when the market fell. I can turn back on the 400 MIDCAP 400 and you will see the same pattern happening over and over again. Stock breaks out on, see, stronger stock breaking out before the market breaks out into a new high. Stock breaks out here, same as BSC and same as Indian Hotels. Market rallies, stock rallies, market pulls back, stock flattens. This is not a flattening, but this is a very nasty pullback. If you will measure this, you will come to know from the top to the bottom, stock fell 10%. So it is much smaller, that because the stock is much stronger. But these are all telltale signs that the stock is not falling. Again, stock goes up with the market. Market pulls back in October. Stock pulls back or flattens. Market moves up. Stock moves up. Market pulls down. Stock flattens. See the market here. Exactly. Market topped when the stock was rallying. Then the market pulled back. The stock became silent. Market went up. Stock went up. Again, market pulled back and it was choppy here. So it was pulling back again and again. Again, the stock went silent. Here, market lifts. Stock lifts. Here, see these few weeks again. Market pulls down. Stock flattens. Market goes up. Stock again rallies. Market tops. Then the stock tops. See here, market topped here on this week. Stock topped here. Fell. The stock fell with the market. Rallied this time again. This time the stock has done the same thing the market has done. And then as soon as this breach happens, no matter where you bought this point, these points were all final. At this point, if you would have left, you would have lost 15% from the top. Here you would have lost 17% from the top. And it was a clear exit after that point. And I don't know, like, are you okay with 33%, your stock falling 33%? Because you know what this does to your return, right? Imagine you somehow were able to manage to pick it up here and ride it all the way here. You were sitting at 450-ish% return, and that 450 has become 270. So I don't know if you can live with this, because the story of Trent is amazing, right? So I can't do this. So part 2, sitting and learning. So this is something I come from a creative field. So this is the creative rule. If you want to learn an instrument, if you want to learn how to write, almost any art form, they will tell you, first learn to sit. Not to play the instrument, not to write. First, just learn to sit. If you can't sit in one place, peacefully, to just even think about what you want to achieve, then you will not be able to do it. So this is actually a Hindi phrase that many music teachers use. बैठोगे तो सीखोगे, पहले बैठना सीखो. Okay, so learn to sit and in front of your screen, analyze these charts. And sitting does not mean sitting in front of a live market. I have not done that in like many years now. Even right now, the US stock market is buzzing, and I'm not looking at it. I'm talking to you guys because I just don't want to look at it anymore. During the live market, I would be reading a book or watching a movie or anything I wanted, or playing an instrument during this time. Please sit with the stocks and the charts after the day has ended, and you are peacefully sitting. There is no psychological pressure on you to take a decision on the spot, because you can't take a decision. Even if you fall in love with the stock at that point, all you can do is set an alert there saying that, okay, I love this, but you can't buy it, right? Because the market is off. So market is shut. So learn how to sit. Okay. So the next slide we come to is the biggest winners. I've already discussed this with you. These were the themes, the best sectors, best themes, best stocks. These were the best sectors and themes: renewables, railways, PSU, banks, defense, brokerage. Almost anything you would have picked here, you would have made a above average return compared to the market. And these were some of my biggest winners also, and in general, the biggest winners of the market. Premier Explosives, Ashapur Mindchem. I want to pick, and these are the biggest winners of 2023, and then some biggest winners of 2024. The themes are something that I want to just use a example of a relay race here. That a relay race is like a bull run. The market's bull run is a relay race. But each runner within the relay race, it's a 400-meter race, then the baton is passed from one runner to another, right? That same thing happens within the bull run of the market. Okay, the baton of the theme will be passed on to from one, say, a railway to a PSU to a defense momentarily, and some of those themes will be so strong that they will continue, like the BSC or the broker theme has continued for the whole 2 years. So 2023 winners, 2024 winners, BSC will be on all of them. But these were some of the new ones: GRSC, Shelly, Balu Forge, Garware High Tech. I just want to go back to your the charting platform to show you something very interesting. If you go in this filter where you go in the back test, we have one very interesting runner that I have not shown you, which was Anant Raj. It is from the realty space. This stock, as you can see, gave many different entries. One was in November 20, one was in August 2022, and then this was the magic number that after the whole long base was taken out, it made a shorter base, and along with the market, as you can see, like these coincidences will not stop. April first week 2023, when the market start running, and one of the smoothest runners. I was not a huge part of the stock, but a 500-600% run on the top, 630%. Even today, it's at 560% of the run. It would have obviously thrown you out here in March 2024, got you back in somewhere here, maybe thrown you out in the June this thing, but got you back in. Anant Raj was one of the bestest runners, I feel, of that market. If you will see the back test of, let's say, March 28th, 2023, Anant Raj had a RS of 96 during this time, because as you can see, it was making all-time highs, or at least 52 major, not all-time, but multi-year breakouts were happening in Anant Raj during this time. In as you can see the results of 2023, you see all of these months or quarters before that also, it had given triple-digit returns, which, by the way, led to this part of the rally. This rally, from even if you count from here in 2020, this previous rally was 500%. So if you were looking at post-COVID stocks, this would have come in your radar around November 2020, and it would have had a very nice run. Real estate as a sector was also running very well during this time. And this time also, real estate was a very nice theme to be in. As you can see, all of these very amazing. So the more amazing results you have, the more amazing the run after that will be. In most cases, like you saw in Trent also, it had been giving very good results from the beginning. But where did the real run start? The real run starts when the market is with the stock. Before that, yeah, you will say that, okay, I missed maybe this part of the run. I missed this. 96%. Stock doubled in that much time. And you will be like, okay, the stock has doubled now. Maybe it will not do so much. The stock went 7x after doing a doubler. So from the bottom, it has moved up 1500%. So I am more of a, I want to make this 500-600% more than I want to make this 100% here. If you are more prudent of an investor or a trader, you will be able to do better. But that was one very interesting thing that happened to me here, was that the RS was very high. It was, as you can see, we're 96 RS. Then what happens in October? Again, the market bottoms, it again stabilizes. Now you would be like, okay, how will I go back into this stock? How will it come back to my radar? In October 2026, again, if you see the one of the highest RSs, 90 RS. And here also it was at 90 RS. So the higher the RS of the stock, the more likely it is to perform. I'll show you something very much more interesting, because this software does that for you. See the past winners of 2023 or 2024, you will see this pattern again and again. Let's see the backtest results from October, March. Okay. You see these rallies, 500, 600, 400, 300% rallies. See the RS. By the way, anything under 200% does not show up here. And the lowest RS you have is of HDFC Bank in March 23, which gave only a 11% run. But see if I sort it by the highest runners, 540, 570, 560, 400, 300, 300. Look at these RSs when they were not, they had not given these runs at that time. That's what you need to remember. These RSs are not going even in the 70s. In fact, they are in the higher 80s. They are not even in the lower 80s. As soon as you start going down the list, you will see, okay, now you are first seeing 70 RS, 74 RS. So actually, you should not never look at anything under 70. But if there is a stock that is showing up in your scans which has 80, 90 RS, you should give it the preference. See, in March, we saw that the run till now. In October, since October 2023, the best runs have been 400, 280, whatever is. See the RSs. Except 1 and 2 names, they are not in the 70s also. And the ones that are, they are above 70, obviously. And what is the poorest RS of this, which is a 28% run? 38, 38, 42, 42. So look at the runs that they have had. It's almost, I'm sure some of these companies are very small, so they don't really matter to us, but the runs are also weak. There will be this one odd stock, which past RS was Nuama, which was past RS was very weak, but the stock gave a good run. So you see how rare this is versus how common this is. That's what you need to realize. So going forward, the last thought was alternative strategies when the market is falling. So one of my favorite things to do is don't do anything, just rest. Go for a vacation with your family. You will see a lot of people on Twitter right now who are on vacations, who are professional traders. Focus on your job if you're at a job. Study your trades, study books, polish your system, learn from your mistakes, see the winners that you missed. All of this time you will not get in the bull run. You will not get it in the bull run. You will have to be very much prudently active on the market during the bull run. So one thing is just rest, put your funds in a liquid fund so your equity curve will still keep rising. It will not fall. The second option, which is not a very favorable one, is shorting the market. This is something you have as a completely different skill. You have to train yourself all over again. It is not the opposite of going long. Please do not think that shorting is the opposite of going long. It is a very different kind of different kind of a market actually when you're shorting it. The third option is this, by the way, is a double-edged sword. It can make your equity curve rise, because if you know how to short, amazing. But if you don't know how to do this, then your equity curve will fall, even though you are not long in the market. So in the bear market, you will keep losing money, even though you're not long. Commodities and cryptos are another alternative asset classes. So if you really feel that itch to trade, and you want to practice, you are telling yourself you want to practice trading, then you should do it somewhere that is not equity, and you should check first if crypto and commodities or whatever is available to you in your market is even worth trading at that time. In my case, as you will have maybe noticed, I was long gold. I am long gold, and gold has been doing some very nice things this entire year of 2024. And recently also from this point, it's a weekly chart, so you'll maybe not be able to see it, but it made a very large base and started giving a move. I've been long from all these points. I've tweeted about it, so I don't want to rant about it. Crypto is again something I have tweeted about a lot. So all of this will help you scratch the itch. But ideally, till you are a very, very consistently profitable long only equity cash trader, do not go for futures, do not go for options, do not go for shorting, do not go for all of these other things till you are very, very good with going long in the market, in the cash market. Just a quick situational awareness thing. So before we see, what did all smooth runs have in common? That they all happened with the market, not without the market. The stocks were going up, no doubt, but the stocks go up more smoothly without giving you a lot of psychological pain when the market is with you. And what is the situational awareness telling us now? Okay, let's do this. Not that it's going to be a big reveal. Situational awareness is doing this right now. The market is making lower highs, and even after just taking resistance from very short term this time, I was hoping that it would at least go till here to before it fell, but the market is really, really weak right now. And a very good example of this not going after fundamentals is this name, that when you are entering the stock, you see March 24 results, amazing. June 24 results, amazing. So March 24 results here, they came out in April, and then here this one. March results came out in July. Exactly when the results came out, the stock started moving up, and the stock gave a beautiful run. When everything has to be in your favor when the stock run is on. But when the run ends, see where the smooth run ended was around this price. This was a very bad breakdown. Again, it tried to stabilize, move up. You would have maybe entered again here thinking that, yeah, it could continue the run, right? Of course it could. The broader market was weak here, so the stock also pulled back. The broader market did try a rally attempt here. So this tried a rally attempt, but then it broke down. Now, if you have not exited it here, if you have not exited it here, if you have not exited it here, and then it tried to give a pullback, and finally the results are out. Guess what? The results are amazing. What to do now? I'm not touching the stock because I'm not touching any stocks right now. But okay, so what is the whole calibration or the encapsulation of whatever it is that we are doing? The market is falling, so we have to look for stocks that are not falling. Now, I have tweeted about this a few times. I will share some of them with you compared to what we saw the other stocks doing. This stock has been sleeping for a very long time. This is a very long base. And even right now, see, as the market is falling, this stock on a weekly time frame, you will not be able to see it clearly. This stock has started making higher lows. I'm not saying this stock will become the winner, but at least this is what a probable winner should look like. Do not expect this stock to go 5x up. It's a very large cap stock.
Yeah, disclaimer.
Yeah. Kotak Bank, again, a stock has been sleeping. Stock has been sleeping for a very long time. Has been not just that, like I told you, look at the results. For a large cap stock giving 30, 40, 50% jumps, 70, 80% jumps, anything over 10% for a large cap stock is an amazing result. And see what the stock has recently done. It came out with another result, gapped up 9%. It's been holding the gap. So we don't have to enter it here. We just have to keep looking at it. When this longer breakout, longer base will be taken out, like this sloping base has already been maybe taken out. So we can see another flat base here. This might continue, maybe if the market continues to do this, let's assume, at least for now, for the sake of study, that this will continue to meander here. You see where we will be sitting. We will be sitting in July 2025 by the time this stock actually moves up. Maybe it will not do that. Maybe the market will stabilize sooner, in which case it will just make a handle here or just above this and move up. And that will be the time when the market itself is in sync with the stock. Right now, yeah, the stock is strong. Yes, of course it is. It's done very well right now. It's not falling in a falling market. Everyone has written this stock off. Let's go a little further away from maybe a large cap name. Apollo Microsystems. See what the stock has done recently. It has on very, very huge volume, some accumulation has happened. Look at the results. The recent results were also, past results were not bad. The recent results, July 24, September 24, have been 300, 100%, triple digit returns. The stock has run up 54% and now is again correcting. But as far as the story goes right now, the low is a higher low. And right now also, the stock is about 10 EMA. Can you imagine the market right now is under the 200 EMA and this stock is above the 10 EMA. And it's holding that. Today it just touched 10 EMA and went back up. All of these stocks in the last 2 days have done so well for themselves and for the investors. Aeroflex is another one. Very good results have already come out. By the way, just a disclaimer, this result is not out yet. So I'm kind of waiting for the result and the rest of the market too. This is all waiting time. Aeroflex went up like a little bit of a rocket actually during the result time. The results came out, stock rocketed 44%, and now it has come back down. All of this will make some kind of a base. Look at these bases here in the previous run. Stock will make some kind of a base and then it will run. So you don't have to be in a hurry to buy them. You just have to be in a hurry to stock them. You have to stock these names. So see, Apollo, breakout of this cycle. So in this cycle, these are the stocks that are broken out. Apollo, Aeroflex, Lloyd's Metal. Look at what this stock is doing in a falling market. It has given a run of 85%, not going below 21. Today it undercut it, but by the time it closed, it's making a very nice flat base. This is an IPO name, so I don't want to get too much into this. Indus Tower, another big cap name, which is just about to show earnings. Bajaj Finance already discussed, Kotak already discussed. So look at Bharti Airtel. Massive run, digestion is going on. I have tracking positions in all of these stocks right now, just a disclaimer. Escorts is a reversal play, but since auto is, I'm not that great on auto right now. It has fallen, stabilizing and trying to make a kind of an inverse head and shoulders kind of a thing here. It has given me this alert, and again, the results are not out. So maybe by the time the results come out, this base will form and it will go up. All of these are not predictions. These are all ways of just anticipating what could happen. I'm not taking any action on them.
So when should one ideally take action on them? So what should be the ideal index position at that time, and what should the stock be doing? So when will you act? If we can just use some,
we saw
like
this
guidelines.
Yeah, we saw this already, right? That what was happening in the index, what was the ideal? Let's just see this chart right now. Actually, forget the stock now. Let's just see the mid cap, mid small, whatever index. It doesn't matter. By the way, you can do this with the CNX 500 also. I just don't like doing this with the Nifty. See, what was the ideal? We all know that ideal time right now. This whole phase, this whole time was an ideal time to make entries. All these weeks were ideal time to make entries, right from this week to maybe this week. Then there was another ideal time here to make entries, which is all these 2-3 weeks. And this is retrospectively very clear, obviously. But what was the index doing? It was making fresher highs. Here it was making fresh highs. During bull run, by the way, when the broader correction is over, that time, this kind of a flat base is, a long flat base is expected. When the bull market is already on, don't expect the stock market or the stock itself to make a 2-year, 3-year base, right? We can't do that. Right now, what we are doing is we are in a bad phase of the market. So we are looking at stocks that are in their very good phase right now. So all of these names are like, but recently all of them have started breaking down, right? These are very strong names, by the way. Look at how much they have fallen. PGEL has fallen 6% today. And they are giving very clear-cut indications. Look at this run of 2024 of PGEL. This is a strong stock from the beginning, ran up 300, 400%. Your 400% would have become 260 by now. Just these 3 weeks of sleeping will cost you that much money. There are stocks that were setting up. I was taking positions in them before the market weekend. Same thing I was doing. It was a nice stock, good results, 30, 25, 30% kind of jumps in, and 40 and 20% jump in sales. So all good. Long bases were in place. There was tightness on the weekly chart, and look here, the weekly chart gave a nice breakout also, above average volumes accumulation. But and I exited the stock very fast when this move reversed. And the day you will see it more clearly. I entered here on 1st Jan. By the 6th of Jan, I was out when it went back into the base. Then obviously the stock was strong, so it kind of tried. But since the 6th of Jan, if you exited something, see the small and mid, the mid and small on 6th of Jan. We were here. Now tell me, if you saw this happening on 6th of Jan, after that, when will you enter the stock? Why would you re-enter that stock? The stock market is not giving you any indication. But here, if it let's say breaks a base here, let's say we are in a very short bear market. Let's assume that it's over now, because it's not bad, right? It's actually fallen a lot from the top. If you see, the market has already fallen 13-14%. This would be a very decent correction actually. Maybe not time wise because it's happened very fast, but price wise. Now let's assume this is going to start contracting here, and it's going to move out from here like this. That will be a very interesting time to pick a potential winner. Even if the broader market is weakening here, this would be a spot, because as soon as the broader market would hit this place and reverse, that stock would also give you an exit profit, probably with profit. Or the better thing obviously would be to see, obviously we don't have the data to work with right now, but how this was basically, this is a good example that the market was falling, and here it gained all the MAs, it stabilized, and 2nd December was a day almost everyone was, all of these days when it reversed, all of these days people were buying stocks, and all of these days were when the stop losses started hitting. It's not a coincidence. This is how the market works. When the money supply is taken away, stocks will fall. There's no other way. The stocks need money to go up, basically. So situational awareness is telling us right now to be very, very far away, and maybe probably study, read books. I'm reading 3-4 books at a time right now. I've put myself on a challenge, so I'm doing that. And yeah, thank you so much for giving me an opportunity to talk. Congrats, you made it to the end of my rant. Now go study. Is my message to you.
Yeah, I'm hopefully, I think at least few hundreds of people would have reached till this end.
Yeah.
Yeah. And yeah, I think if there is any one thing that I want people to take away, I think it's the beautiful comparison, side by side comparison, like where the dotted line, you move it across the stock, and then the stock, the dotted line moves also across the index. I think that is
Yes.
the best part of the whole video. I think if at least that thing is taken away by audience, I think it would serve the purpose of this video. I think that would help people in analyzing more winners, and then see their current how their current stocks are doing, and then they can compare to with this video if they're doing very similar. If not, they know that that is not a really a strong case for winner. They can go and search for better stocks. So
Yes.
I think we have made a very beautiful information for people. I think it's all up for people to use now. So thanks for your time, Neil. Bye. Thanks a lot.
Before we end, I want to really thank you for creating this, because you've been really prudent with adding more features and things like that. Also, the only sad thing about this is you didn't pay me for this, so that's something I want to put as a disclaimer, that Madhav did not pay me, so that's the complaint. But I hope that this platform and whatever I shared right now, at least using this platform, because this platform was not available a while ago. People like me, when I hear about old traders, I see that they used to draw charts by hands, and they didn't have trading view also. And now I feel
Yeah.
sitting here like an old person saying we didn't have this RS thing, and we had to manually map the RS, and I couldn't backtest RS like this, and all of this was not available. So I'm very glad that it is now, and hopefully old people like me will be able to continue trading because of this help now. But yeah, there's going to be no substitute for manual study of each and every one of these winners and the themes that they came out of. And like
Yeah,
I've
I think
already,
the
I'm giving a massive disclaimer again that I'm seeing financials or these banks, I would say, or like these Bajaj Finances, Kotak, and these, because they've been sleeping for a very long time and been giving good results and growth and stuff. And in general, also there is a theme that financials usually lead a fresh bull market. These are all, take all of these as thumb rules, or we take all of them with a pinch of salt, because nothing is written in stone. I just do this right now. So every day I have a weekly planner here. So every day of the week, when new stocks give results, good results, I mark them. Like Aeroflex came on it a few days back. And I have a monthly planner because I'm an old person, so I don't have software for this. This is a monthly planner where during January, because results come out in Jan, I start writing down the names of the stock. Like for example, I'll tell you, Karur Vaisya is a very good example of a stock that has given very good results, but it's not that high on my list right now because of how the chart is or whatever. But because it's given good results, it's in my eyes now. And maybe PSU banks also, along with private banks, become a theme. I have no idea what the theme is going to be. There are only indications that because of Apollo Microsystems being a defense stock and stuff, that these might be themes that might be returning. I don't know. Themes sometimes they return, most of the times they don't return, and fresh themes are made. So there is really no way to tell right now that what will happen. But all we can say is keep looking for 52-week highs, keep looking for flat bases, keep looking for good results. And in fact, the more this bear market continues and the more results come out, now imagine Apollo Microsystems has given one good result. Now maybe it will come out with another good one. And it will keep doing that for 4 quarters, and the whole year the market has not done well. Can you imagine what will happen to that? That is like pent up anger in the stock to prove itself. Jim Ropel keeps calling these as basketballs underwater. So as soon as the pressure is lifted, they will run like that Anantraj run that you saw. That for so many quarters Anantraj was giving triple digit returns, and then finally when the market said, "Okay, I'm also with you," it runs like the run is smooth as butter, basically, is what I say.
Yeah, I think all investors should take a note of this point, that to don't just let go of stocks that gave good results because of bad market conditions. I think this point, like, they're all waiting for market to say give green signal. I think, yeah, that's also very beautifully put.
Yeah,
Yeah, and thanks overall for your time, Neil. Bhai. I think
no problem.
we can keep doing this again if we get a good response. I'm sure many of the people will like us, and they would love to hear you for 3 hours, 4 hours speak sometime again in future. Thanks for doing this again.
Yeah, yeah. All right then. Thank you so much, man.